It's proven, Peter, that people that have like annuities and that type of thing that are building up income are happier in retirement. On the whatever date that they want, the 15th or the 30th of every month, they're actually getting a check from an insurance company that they know is coming.
And welcome in, ladies and gentlemen. We are here with Tim Stearns, founder of TJ Stearns, Inc. Tim Stearns is Chicagoland's proactive resource for a common sense approach to planning for your financial investment and retirement future, and is founder, president, chief advisor, and certified financial planning professional at TJ Stearns, Inc., conveniently located in Arlington Heights and serving proactive Chicagoland area savers and investors in formulating the plan to achieve your financial and retirement goals. This series is going to highlight the new book, The Holy Grail of Investing, a book written by Tony Robbins. Now, Tony Robbins is a prolific American author and motivational speaker. He holds seminars that have been world renowned for motivating individuals to get out of your comfort zone. He is author of a couple books, the first, Unlimited Power, and Awaken the Giant Within, another title aptly named, as Tony Robbins is kind of known as a giant among men. He is a large human being, but this new book, Tim, Tony Robbins' book, The Holy Grail of Investing. Tell us why we are going to highlight this book and who this webinar series is going to be for.
Well, this is for when Tony wrote the book, I mean, he was going after, the high net worth individuals out there, pre-retirees, retirees, baby boomers, basically. Also long-term investors, individuals seeking financial freedom, that he preaches about all the time. And then also investors who want to diversify. All right. So you're seeing a lot of people out there who have their stocks and they have their bonds. And that's about it. The only other alternative investment, I'll call it, is cash. And with that comes a problem, because when the markets go down, nowadays stocks and bonds go down, they're correlated, right? We look back to 2022 when the portfolios of most people, stocks were down 18%, bonds were down about 13%. And so you're looking at the 60-40, which is what a lot of baby boomers are used, is one of the worst years ever for that portfolio. So what I found in my 30 years of experience is that these people out there, baby boomers that want to retire, are looking for diversification. Lesson learned in 2022 that when both of their sides of their portfolio, stocks and bonds, went down, we need an alternative. And I think that's kind of a precipice for why Tony wrote his book. Again, he's looking for high net worth individuals, pre-retirees, long-term investors, but the common theme here is diversification.
Tony has written other financial books, Unshakable, Your Financial Freedom Playbook, as well as Money, Master the Game. But this series will cover his newest, The Holy Grail of Investing, again, aimed for high net worth individuals. Some of the strategies discussed in the book really are exclusively for high net worth individuals, pre-retirees, retirees, long-term investors, those seeking financial freedom, and investors interested in diversification. Now, if you would, Tim, again, you help those same kind of people, clients, those looking to have lasting financial freedom and confidence, retirees and pre-retirees. You offer a wealth of valuable insights. There are certain strategies and recommendations in this book in particular that you do want to highlight and caveat. So who maybe is this series and this book not especially for?
I would say it's not for people that have under, $500,000. A lot of these vehicles that he talks about are highly illiquid. They're what we call private placements or private equity areas. The people that he interviewed are professional investors, guys like Christopher Zook, Robert E. Smith, Vinod Khosla, Michael Kim, who they call the godfather of private equity. And then lastly, the one that he comes back to all the time is Ray Dalio, right? Ray Dalio runs the largest hedge fund in the United States. Hedge funds are notorious for taking 20% of your profits, having high fees, but in addition, being highly illiquid. And you can go from, driving a Ferrari to taking the bus the next day in some cases. So my point is, and that Tony harps on here, is that again, most stocks and bond portfolios were down about 20% in 2022. These private equity people were up 14% in 2022. And I think that lends credibility to the fact that these guys are professionals. What Ray Dalio talks a lot about is that if you have 8 to 12 alternative investments in your portfolio, you can cut your risk by 80%. So that's one of the things that we're trying to focus with our clients, is to show them that you need to have alternatives. You can't have just stocks and bonds, can't have just mutual funds, ETFs. You need to go outside of that arena to lower the risk in your portfolios.
So again, proactive guidance included throughout this series, ladies and gentlemen, but a few cautions or where alternative approaches may be necessary is that advanced tactics and strategies are going to be discussed. Private placement, high risk alternative investments, where there may be the challenge of that private placement, such as hedge funds and other high risk alternative investments that may have liquidity issues, require a high level of investment sophistication, significant capital, may be complex, excessive diversification into niche markets will be discussed, where Robbins does emphasize the importance of diversification, including exposure to these niche markets and sectors that may not be suitable for all investors, complex tax strategies, leveraged investment strategies, ultra exclusive investment opportunities that may not be appropriate nor even available to non-accredited investors. So, Tim, if you would talk about how the key strategies from this book can be effectively applied to the demographic that it applies to.
Back to what you were just saying, though, Peter, private placements, high risk, they are illiquid in a lot of cases. What we're trying to show our clients is that there are things out there that you don't have to go into a hedge fund or private equity for to get an alternative inside your portfolio, which again, the largest hedge fund manager in the world says that reduces your risk by 80%. And if I'm a baby boomer out there or someone who's wanting to retire, I'm going to look at vehicles that are going to have, not correlated to the markets. Things like REITs, annuities, commodities, maybe even cash value life insurance. These things do not correlate with the markets, and that's important to have inside your portfolio. The thing that we see people coming to talk to us about is they feel like they're not diversified. And what we're trying to show people is you need to have a more balanced approach. And I think the darlings that you're seeing of these different these high flyer stocks that were down 50% in 2022, and now they're the darling of the day, those are just coming back and they're being in the green for those people. So you need to have alternatives and be more diversified.
Diversification beyond just traditional assets, Tim?
Absolutely. And we see there's I'm helping a gentleman right now that sold over 6 different apartment complexes, look at a 1031 exchange into a REIT that we have. The gentleman did not want to have to pay taxes on all of his gains. So we showed him a vehicle to drop the money into that. So that way it's professionally managed. He doesn't want to be a landlord anymore. There's a lot of things out there. I think that the normal rank and file person who, even if they're a do-it-yourselfer, all they're looking at are stocks and bonds. You need to get outside of that arena to make sure that you are diversified, and better yet, not to lose money.
When it comes to diversification, Tim Stearns, CFP, as well as the team from TJ Stearns Inc. can help clients diversify not just across traditional stocks, bonds, and mutual funds, but also additional alternative diversification. Tim, one of the big questions into our latter working years and into retirement, creating reliable retirement income, also a big issue, even for the affluent and high net worth individual investor.
It's proven, Peter, that people that have like annuities and that type of thing that are building up income are happier in retirement. You know, on the whatever date that they want, the 15th or the 30th of every month, they're actually getting a check from an insurance company that they know is coming. It shows that those people are happier in retirement because they have gone outside of the normal arena of stocks and bonds to get this income. You know, we have people come in here and talk about, oh, I'm going to just do a dividend. You know, dividends are going to pay out. Well, you know, those dividends aren't guaranteed. And what we're seeing is with interest rates being so high, the ability to get into some of these annuities and the payouts are the largest I've ever seen in my 30 years in the industry. And there's a lot to be said about having peace of mind when you're in retirement.
Tim, another area of focus there at TJ Stearns Inc., as well as in Tony Robbins' book, The Holy Grail of Investing, is in creating advanced tax efficiency. Why is this so important to today's saver, investor, retiree, particularly potentially the high net worth saver, investor, and retiree?
Peter, in the Holy Grail of investing, he talks about how people want to mitigate taxes, right? No one wants to pay more than their fair share of taxes, regardless of your political affiliations or your beliefs or anything. No one wants to have high tax bills. Okay. So how do we legally get around that? And why would we want to? Well, one of the things that's going on is that at the end of 2025, the current tax bill is going to be expiring. So if Congress doesn't get in line to get a new tax bill together, the 12%, for example, tax bracket will go to 15%. And that doesn't sound like a lot, but that's a 25% increase. So what we're looking at telling people about is maybe this is the time for a Roth conversion, right? I've never seen tax rates this low. In fact, most baby boomers haven't seen that since the 1980s. So that's one of the things that we're looking at with our clients, our Roth conversions, okay, and kind of nibbling on that tax bill that they know that are coming. The other thing that we can do is, you know, talk to them about qualified charitable distributions, right, or charitable remainder trusts. These are the things that we're seeing, you know, that those are advanced planning to mitigate taxes. And another one that we're seeing a lot of people doing are even in their 60s and 70s, looking at life insurance to take their required minimum distributions and putting them into life insurance that has long-term care components to it. And what they're doing is they're extrapolating their wealth, like the uber wealthy have done for years, into life insurance death benefits that are tax-free.
And Tim, estate planning and legacy building is a necessity and goal for many investors as well.
Right. And Tony talks about that quite a bit at length in the Holy Grail, that, you know, you need to make sure your estate is in order, as they say. You know, if you haven't done an estate plan ever, you should have one. You know, we at TJ Stearns, we use a estate attorney to help us with any of our estate planning. I'm finding a lot of people are coming to us because their current advisors don't advise. They're having them help with their investments, but once they get out of that area, they're not very helpful. So we look at people needing trusts, wills. I mean, at the end of the day, we want to avoid probate, which, you know, in our area, probate can last as long as 2 years. And that's what we try to, at TJ Stearns, we're trying to help people get, you know, their affairs in order before, God forbid, something happens. And we've seen horror stories from, you know, being a certified financial planning professional. You know, we see these where people did not get their affairs in order, and we're here to help them with that.
Tim, I know that Tony is also a big proponent that results are driven by behavior, habits, mental approach, and routine. And he talks about managing market volatility and behavioral finance as well.
Right. And people are motivated by two things when it comes to investing: fear and greed, right? The fear that I'm going to lose money, and the other, that I want to be making more money than my average neighbor, right? So we here are big believers in active management at TJ Stearns. Tony talks about in his book Holy Grail that to manage market volatility, you need to have active management. We are doing that. We have stop losses. We might write covered calls and options on different investments, but we're having active money management because you need to make sure that nothing should be on autopilot in your portfolio. You want to manage it so that you're not losing money. And the important thing is the buy and hold and that type of thing that we're seeing with a lot of other companies out there didn't really work in 2022. Luckily, the market has come back, but we're a big believer and proponent of active management.
And so many times it has been proven, and Tony harps on this in the Investing Holy Grail, but results, Tim, are derived from staying focused on long-term goals rather than reacting to the day-to-day and the moment-to-moment emotions and making decisions based off those.
Right. And you saw this, a couple of weeks back, the market bottomed out pretty badly. And what we try to explain to our clients is we've done a plan, we're sticking to that plan, and we're focused on the long-term goals of that plan. And Tony harps on that quite a bit in his book. And that's what we're telling our clients. We have a plan. We're going to make sure that your income is still derived from the investments, but sticking with that, we're going to have the ability to be dynamic in our plans, and that's what we preach to our clients: stay true to the course.
Tim, I think every investor understands that there are some costs that come along with investing, but knowing, understanding, and controlling fees, costs, and expenses is another element that Tony Robbins focuses on in the Investing Holy Grail book.
Right. And in that book, he talks about having transparency in fees. One thing we pride ourselves at TJ Stearns about is that we're going to disclose the fees to people. Unlike some of these other places that we see where people think they're only paying one fee and they're actually paying other fees. So when we do an x-ray of a portfolio, we'll explain to the client that at TJ Stearns, this is what you would pay, this is what you will receive. I'm a big believer in you pay for what you get, and getting a better portfolio. It does cost money, but there's always a disclosure there that makes sure that at TJ Stearns people understand what they're paying and what they're getting.
In summarizing and recapping the main highlight themes of the Holy Grail of Investing by Tony Robbins, Tim Stearns, CFP, your certified financial planning professional, resource there in Arlington Heights to all proactive Chicagoland area savers and investors, kind of highlighting the book. And Tim, one of the final things that Tony Robbins emphasizes, the value of that professional guidance that we receive.
Right, Peter. And with 30 years on the job here, at TJ Stearns, we've always tried to stay true to the course that we tell our clients. And anything that we have our clients in, we too are investing in. And it takes sometimes some due diligence to stay with it, and being disciplined, especially when the markets are so volatile as we've seen the last year or so. But we hold the line. And we want to make sure that clients understand this is why you're paying us. We're going to hold your hand when it's dark and stormy at TJ Stearns. We're still going to have the lights on and make sure that people understand that we're here for them, and we get them through a 30+ year retirement is our goal.
All right, ladies and gentlemen, again, we are talking with Tim Stearns, CFP, certified financial planning professional, founder, advisor at TJ Stearns Inc., your resource. And today and throughout the series, we will be diving into Tony Robbins, the Holy Grail of Investing versus reality. What do $2 to $5 million investors do? Should they do? And what should they not focus on? So, Tim, if you would, provide us with a little bit of background on yourself and your firm, your experience in the industry, and helping savers and investors achieve and accomplish their financial goals.
Well, Peter, 30 years ago, this past May, I celebrate my anniversary in this financial advising role. 30 years ago, I was just a stockbroker. And I remember in 1999, I actually got a letter in the mail advising me that I could get a certified financial planning certificate at DePaul University. And with that came my knowledge that I needed to see the whole landscape of being a retirement advisor for people. So with that, I'm a certified financial planner. I'm a chartered federal employee benefit consultant. And then we also are certified financial educators. So I try to, we work at libraries, college classes at the areas around here. To education is power for these people. And to understand how to get to a full retirement is so important to us. And we try to pass that on to people. One of my mentors always said, sharing is caring. And with that comes the ability to tell people, hey, you only have stocks and bonds. You're going to need to have alternative investments inside your portfolio if you want to have a successful retirement.
Once again, we will be reviewing and discussing Tony Robbins' new book, The Holy Grail of Investing versus Reality. What should an investor with $2 to $5 million really be doing, and what should they not focus on? The purpose of this webinar is to help that $2 to $5 million investable asset investor understand the strategies from Tony Robbins' new book, The Holy Grail of Investing, and identify which of those strategies are most applicable to your financial situation, which may be designed and discussed with not you in mind. Listen, Tony performs a great service when he does the interviews and is one of the best in the business. But it's also important to note who has access to some of these strategies and who they are most appropriate for. So Tim Stearns, certified financial planning professional, your CFP, across Chicagoland with the Protect and Grow written retirement income plan that he designs for his clients, is here to cover the book and discuss which of these strategies are or maybe are not most appropriate for you, ladies and gentlemen. Topic number one discussed, Tim, and we've covered it in brief, but correlated versus uncorrelated assets. Would you talk us through this important topic?
Well, you're looking at the fact that when I started 30 years ago in 1994, if someone wanted low risk, we'd put them in bonds. And if they wanted, higher risk, we would put them in the stocks. And it was like a teeter-totter, right? The stocks would be up, the bonds would be down, and vice versa. Nowadays, what we're finding is that stocks and bonds are correlated. And I'll go a step further. I see people trying to do alternative investments, like, for example, the cryptos. And we're finding cryptos are actually correlated to the stock markets. So what is out there that I actually can vet, that I can know that will actually be uncorrelated to the markets? And we've found many different things that are much better than doing cryptos or these highfalutin private placements where your money is a liquid. And that's what we try to strive for with our clients, is to show them a little bit of a balanced approach to their investments.
Now, Tim, Tony talks about the importance of diversification. He talks about correlated and uncorrelated assets, but he does also speak to some of those more advanced strategies, such as private placements and hedge funds. So where does this differentiate between maybe the $2 to $5 million investor versus maybe the $20 to $25 million plus investor?
I'll ask you, Peter, how would you feel if a significant portion of your portfolio was exposed to market volatility because it wasn't properly diversified?
Well, I think me, like many other investors, Tim, don't want to see a significant portion of the money that we've worked so hard for disappear without having anything to show for it, or without us having withdrawn it to spend it or to reposition it. But when we don't have that diversification, I think, to Tony Robbins' point, that's exactly what we may be subjecting ourselves to, what may happen.
Well, and what kind of impact do you think a lack of diversification would have on your financial security, especially as you approach retirement?
Well, that could be particularly dangerous, as Tony points out, Tim. That's why he says to have this widespread diversification, correct?
Right. And how confident are you that your current advisor is focusing on the right mix of assets to truly protect your assets?
Honestly, I'm not entirely sure. I know that diversification generally is a handful of different stocks, different bonds, different mutual funds. I know that accounts and investments can be managed, but I don't know if they're looking at the bigger picture of true diversification and correlated versus non-correlated, as Tony points out in the book, and as you talk about very often, Tim.
Right. And it's important that you have uncorrelated assets. And if anyone's going to learn a lesson from 2022, I would hope it's someone who's either pre-retiree or retired, because you are a net seller of assets in retirement. You're not going to get it back if you lose, right? The only growth you'll have is in the market. So that's why I would want to shore up my portfolio with 8 to 12 different alternatives, right? That will reduce my risk in my portfolio by 80%, according to world-renowned trader and investor Ray Dalio.
Once again, ladies and gentlemen, we are talking with certified financial planning professional Tim Stearns, CFP, and reviewing Tony Robbins' newest book, The Holy Grail of Investing versus Reality. What should a $2 to $5 million investor be doing, and what should they not focus on from this new book? It's a comprehensive strategy book, but it is potentially aimed for that higher net worth kind of conversation. Some of the strategies may be very appropriate and some of them may not be. We're here breaking it down with a certified financial planning professional, Tim Stearns, CFP, president and founder of TJ Stearns Inc. We will continue this conversation. So we look forward to discussing more of the content of Tony Robbins' latest book and helping you determine what is and what is not appropriate for your situation.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.